Welcome back. You're watching us here on Chartbusters. One of the stocks which is busting the charts for the last 3-4 trading sessions in a row has been Bikaji. Nigel, we had that extended discussion on Bhujia the other day, but this one seems like it's got fire because up, 7.5% today. This week itself, it's up, 28, almost 30%. And guess what? It's trading at closer to 76, 77 times 1 year forward earnings.
And assuming that the forward earnings
would be double of what it was
very strong.
Year.
Just take a look at that, and at the IPO price it was expensive. Now, in fact, it's through the roof, but clearly the street believes that there's tremendous potential out there. One of the factors that works for them is that they have the additional capacity, right? So if people start munching along and they want to munch more and continue to munch, then, the numbers will look good. So let's see whether or not...
Interesting to see because, for businesses like this, capacity is one thing. The other thing is the distribution, whether they go ahead in the other spaces, etc. or not.
Yeah.
And not a lot of people have, as they say in the stock market, mal as well, right? Because it's the promoters who have it, the funds have it. Let's see where they go. And
distribution is very important, Mangalam, for Bikaji. I'm sure you track it more closely, but for them, advertising as a spend of their total sales is not that much. That's telling you that this distribution is even more important for these guys. So I think we've gone on enough about Bikaji. And Sonal is standing by. I think she as well must be, listening in. Sonal, Bhujia this evening?
I don't know about Bhujia, Nigel, but I'm sure if you treat me with something, I'm up for it.
Absolutely, sir. Absolutely, Sonal. And you're going to be treated to a song later today. Mangalam tells me that he's going to be singing, so we're looking forward to that.
We just do future female forward. That's the only thing.
Yes, that's what everyone's going to be tuned into today at 5:30 p.m., right?
Let's focus, Sonal, back on the market action. But Bhujia song, we'll wait by for that. But for the time being, you tell us what Axis Bank post that investor meet that they had.
Yes, so positive takeaways there, and the big, of course, the focus that remains for the bank is digital, because here the bank says that investment in digital platforms is boosting cross-sell opportunities, and that is something that they can take advantage of. With the Citi and Flipkart partnership, it will be among one of the top credit card platforms in the country as well. They talk about their book as well. They say delinquency levels remain below the peer private bank average, that is in the retail category, and they continue to see improvement in their asset quality as well, and that is something that they are very positive on. If there are any macroeconomic headwinds as well, they have strong provisions in place, so they are protected in terms of any sort of headwinds as well. Jefferies has a buy rating on the stock with a target price of 1,110 rupees. The valuation discount of 40% to ICICI Bank is something they think will narrow, and that is something that UBS says as well. They have a buy rating with a target price of 1,030 rupees. They say that yes, bank reiterated their medium-term loan growth of around 5 to 6%, and they also expect valuation gap with peers to narrow down as return metrics sustain. We also have JP Morgan with an overweight rating on the stock. They talk about the tech investments that the bank has been making. They talk about it being at the later stage, and now they should start delivering in terms of operational ratios as well. The glide path of cost to assets is reducing by 25 basis points over the next 2 years, so that's a positive outcome. And they also say that banks' ability to maintain their return on assets at 1.8% level is something that they'll be watching out for.
Okay, all right. Thanks a lot for that, Sonal, for telling us about Axis Bank. But Mangalam, Paytm, it's a fourth of what it was at the top, but it's seen a bit of a bounce today. What are brokerages making of it?
It's a bold call which is coming from Citi because, after an 80% discount to its issue price and 75%, like you said, from the top itself, they've gone ahead and said that maybe it is it's the time to buy Paytm right now with a target of almost 1,055 odd rupees. They've been positive on the stock in the past as well. So it'll be interesting to see, where it goes from here. They say that at current valuations, which is 5 times FY24 EV to contribution profits, it is attractive. However, they do acknowledge the overhang risks coming in from further selling by existing pre-IPO shareholders, something that we've seen in a lot of these new companies. But they believe that at these valuation, risks are overdone. Fintech is a competitive space, but they've gained market share in digital payments versus PayU. So that gives them some bit of comfort. Let's see where it goes from here. The important thing that everyone will be watching out for is when do they turn profitable on the bottom line. Until then, maybe, the street will look at valuations and the metrics and market share, etc. But the key question still remains, when do they turn profitable?